Hi guys, so I wanted to record this video on imbalances and liquidity. So I'm going to start with imbalances. So imbalances is basically if buy or sell orders aren't being met in the market equally, which means there isn't equal amount of buyers or sellers, there isn't the equal amount of sellers for buyers. So price is at an unfair price, there's an imbalance in the market, or liquidity void, okay? And this is caused with an increase in volume, and it can be identified with engulfing candles. So if you look at these candles over here, for this example, this candle, and usually with this increase in volume, there's also a break of structure. If we look at this, it's going to be a bit skewed. Let me just use this. So that resistance or that high and over here. Okay. So this break of structure left imbalance with this engulfing candles. Okay, so this should be your order block. Okay, the first bearish candle before up move is your bullish order block. But now the way that imbalances work is that most often it only gets filled at 50%. So if the market's severe, let me just pause. Okay, so if this is your imbalance from the bottom of this week, there's no weeks over here, to just the top of this order block. So if that's your imbalance, an unfair price, liquidity void within this market, that would mean the market has to fill price, fill the imbalance, or often it will fill 50% of the imbalance, which will be over here. Okay. Okay. Okay, so it comes back to full 50% of this imbalance, which means you could also take your entry from here. And then just to be safe, your SL would be below the order block. So about 15 pips, which is obviously a good stop loss. I usually don't take trades at 15 pip stop loss anymore. Usually about 10, just for the higher risk to reward ratio. But let's just see how far this one will go. Good, reached 2.8 reward, so 2.8%. Okay, over here 4.5%. I might as well also just show you this. I'm not going to get into liquidity now, but this example is just, so I might as well go over it briefly. Okay, change the color. So equal highs, equal lows identify that there's liquidity above it. So let's say, for example, this is obviously a resistance, which means there's either people trying to buy the market above the resistance or sell below the resistance. Okay, so in order for the market to create or collect liquidity, they will target equal highs, equal lows. So in this example, they created equal highs. The market obviously tricked some people into selling as a possible triple top, and then they went to collect the liquidity. Because right now this one would be at 1 to 6 risk reward, so about 1% risk for 6% reward. There it comes back down. So you can also see the market's always creating imbalance. So basically that's an imbalance. This is an imbalance. There's a minor imbalance. That's not imbalance. Yeah, this week and that week's kind of touching. There's no imbalance there. This is efficient price, no imbalance. There's an imbalance, but it gets filled over here. So imbalance, filled. Okay, let's just quickly, so let's use this OB as well for another example of imbalance. So this, just click replay. Yes. Let's say okay, so this new OB over here also broke structure. So you could also have placed a buy from this OB. And basically, if the OB is big, this one's range is that's about 10 pips. What you can do is often, if it's just a week, and you go down to a lower time frame, and you just see a week, there's no refinement opportunity within this candle. So what you can do, you can take, let's go to the top here. You can take your fib and take 50% of the OB, which should be this, and then enter off that. Okay, so you would have about 7 pip stop loss. That quick move over there would be a 5%. Okay, and then let's just use this as well. This is also a nice example of refining it to a bullish candle. So let's take just that. So often, in the sense of a bullish order block, obviously this is the OB. Okay, this. But if the preceding candle is within the body of the bearish candle before the up move, you can refine it to that point. That will be an OB. Okay. Let's just slow down the speed. Okay. Oh. Okay. Okay. So out, obviously here we have break of structure. Break of structure. Break of structure. So I don't enter off the 50% imbalances. It's a good thing to stay aware of. Okay. Because often of times you might miss your trade because it reacted off the 50% imbalance and not the OB, but I would rather use imbalances for targets or something to be aware of when setting your buy limits. Like I normally set my buy limits, sell limits at the OB, so I would do, have to be a nice 4 pip stop loss. Yeah, you can make it. Let's make it 4 pips. 4.1. So here we have imbalance on this week to like that week. And also, I'm just gonna put this as well, this imbalance, just the 50% over here. Okay. Okay, it's moving. Initially, it comes closer to the 50% of the imbalance to reject. And then it comes down, goes up. Speed it up. Okay, there. Boop. Boop. Okay, hang on. Okay, you wouldn't have been stopped out, but it is close. But that's basically how I would do it. Set the buy limit and then get that high risk to reward. You could actually refine this. Identify your 15-minute OB. If you had to refine this, you can actually see this bearish candle. We have imbalance there. So let's say you yes. Okay, there's your imbalance. Refined 5-minute OB. Let's go back to yeah. So you found your 5-minute OB. Identify the imbalance just above the OB as well, and also broke structure on the 5-minute over here. Boom, boom, boom. So obviously that's a valid OB. Then you could actually do that and enter on the 5-minute OB. SL, you can leave it 4 pips and then okay, there you in the trade. You see how it's filling the imbalance over here. So it filled this imbalance. If you wanted to target the imbalance and obviously this valid OB, that broke structure over here, that would be yeah, that would be 6%. And this is the benefit of refining your SLs to about 4 or 5 pips, because now this one would be up 11%, 11.2%, reaching 14%. Yeah, 14%. So this is where the market's at currently. Let's see.